It's good to see you guys again. Today's video, I want to talk about a beginner investor fallacy that a lot of them fall, and it's something that happened to me too when I started investing in the stock market, and it's something that I think it should be talked about. I don't hear it a lot, or I don't see a lot of videos or articles about it. I think that something that's important because I think logic is something that we think that should apply to the stock market, and it definitely doesn't apply to the stock market, and it really makes it really confusing and frustrating at the same time. So it's something that I just want to address, things that you guys can watch out, and what are the logic that are present in the stock market currently, and how to find those indicators to see if the stock market is gonna go up or go down, or if a specific stock that you're looking into should be bought or sold depending on where those indicators are heading. Welcome to SimpleChew. I'm your host, Hank. The first fallacy that a lot of beginner investors fall into is the logic that if they see the brand out there and they see the brand being bought by a lot of consumers, it tells them they think logically that those companies are doing better than other companies. For example, they see a lot of people buying Starbucks compared to Dunkin' Donuts or other coffee shops. They think the Starbucks is gonna blow up, and so they should invest in Starbucks, and then they expect some good returns in the future because they see a lot of consumers buying that product. Or another example is that you see a lot of people driving Toyotas compared to Hondas. So you buy Toyota stocks because you see that the brand is pretty strong. People are buying it. People are driving those cars. So logically, you think that buying those stocks is in the long run is gonna make you some good returns, and that's false. It's something that's gonna burn you in the end of the day. It's gonna burn you in the long term, because just because the customers are buying it doesn't tell you anything about the company. Just using solely the information of just your experience, what people are driving, is really small sample to go for and to make any decisions with. And I think that's something that even myself, I got burned when I was starting to invest in the stock market, because I saw a lot of very passionate about condiments, and I saw a lot of people buying ketchup and mustards. So, and then I started researching what kind of ketchup the people were buying, and I saw the people buying Heinz. So I bought it. I think when I bought it was $70 a share, and then immediately after a couple of months it tanked. It lost 40% of the value, and then it kept going down to 60%. And being a first-time investor, being a beginner, I didn't understand why. I saw a lot of people buying Heinz products, so I thought that it was a home run. It was a solid investment that I could put money in, and I know I'm gonna get some nice returns in the future. And sadly, it wasn't the case, because my research was only looking at consumers and my little sample of my grocery store, and that doesn't reflect the whole nation. It doesn't reflect the whole world or what condiments they're buying, and that was a mistake that I made. Another mistake is by just looking at the brands and seeing the consumer buying, is that there's more information when you go and check the financial statements of all these companies. Just because they're selling a lot of volume of something doesn't mean that the cost of making those items are cheap and they're making a profit. It doesn't mean anything just because they're buying it. You need to look if they're making any money, because if they're spending more money making the product than what they're selling it for, then the business doesn't make sense. If they're not making any earnings and they're not making any profit, that company doesn't make sense. It's something that a lot of beginner investors fall into, that logic that if they see consumers buying it a lot, if they see that the local Starbucks being packed to every day, every morning is packed, or the whole day is packed, you think the Starbucks is going to do really well. But that's just in your little town. You don't know what's going on in the next town. You don't know what's going on in the state and then the whole nation. Another fallacy that I see a lot of beginners is if people are talking about it a lot. If people are talking a lot about a specific stock, if you see on social media people talking about it, if you see Reddit that people are talking about it, if you see the newspapers, Wall Street Journal, if the news is talking about a specific stock or company, and they're talking about how great it is and how everybody's putting their money in there, and then you want to jump in there. 9 out of 10 times you're already late of buying the stock, because if there's one of the keys or the foundations or even logic is that if the news is talking about it, you're already too late. The stock's already super overvalued, and there's little money to be made there. There've been unicorns, black swans that some people call them, where the news talks about it and all these social media talks about it, and then it keeps booming. But those are just black swans. There's not gonna be a bunch of them. Probability of those are really, really, you're gambling. Is the best way I can put it, and it's easy to fall into that logic. If people are talking about it, that means that it's out there. People are have money in their pocket, and it's out there. Logically, people think that other people are putting money, so they're gonna put money too, and they're gonna hold and wait and see if it blows up. But 9 out of 10 times it doesn't blow up. People lose a lot of money. There's a few winners and a lot of losers, and it's something sad to see. It's something that I don't even look at. Even when I was starting, I literally I watch all the news, I read the papers, and I read all the social media posts, but I just don't entertain, because if you just follow it for just 6 to a year, if you follow these trends, they all died out, and it's just pretty sad to see all the losers. It's pretty cool to see the winners in the beginning, because there's a few winners in the beginning, and it gets everybody excited. But it's just really sad to see all the losers at the end. So you might ask yourself what you should be looking into. What are some indicators where you should jump into the stock market, because it's gonna boom, or you can buy the stock because it's gonna blow up anytime soon, because you have done some research. So what kind of indicators you should be looking for? I think that the most important one, there's 3 of them that I look every time that I'm jumping into a stock, or I'm just jumping back to the stock market. And those are inflation, GDP, or gross domestic products, or the unemployment rate. Where is it? I think those tells you about the economy, and sometimes the economy doesn't really reflect what the stock market, or where the stock market is going. But I think it's safe to know that if people feel that they have enough money in their pockets, and they feel like they can invest in the stock market. I think maybe not individual investors can invest, but I know big corporate investment firms are gonna feel more secure to invest, and those are the big movers in the stock market, and those are a lot of them that they get a lot of money from mutual funds, and they get a lot of retirement money, and it's billions and trillions of dollars there. So any move they make, if they feel like the market is growing, they're gonna get riskier, and they're gonna put more money in the stock market, and then everything's gonna go up at the same time. Those are the things that I look for. I also look for big things that happen globally. So if, for example, it's like if there's a drought of potatoes or a shortage of potatoes. Potato is something that, this is an example. Let's say there's a shortage of potatoes, and you try and invest in McDonald's or a vodka company, and you think potatoes, I know McDonald's make fries, so they need potatoes, so maybe potatoes is gonna lower McDonald's stock. But if you think about it, McDonald's business is not just potatoes, it's not just the fries. They sell burgers, you need to look at the beef, they do buns, you need to look at the grains and flour and all that. But vodka, let's say there's a vodka company that only makes their vodkas out of potatoes. Oh, now logically, if you think that there's a global shortage of potatoes, and this company just makes their vodka only from potatoes, that could be an indicator that the stock might go down. Maybe they get smart, and they start making it from corn or whatever, sugar. So they shift the supply of how they make their vodka. But that's something to think about. That's something that logic actually helps. And it's important to know what's going on globally, because everything now is interconnected, and it's something that I always look for when I'm reading the news or I'm watching it. Thank you guys for watching. Hopefully you guys understand that sometimes logic has nothing to do with the stock market. Sometimes things just go all over the place. It's super random. The probabilities of things are hard to predict, and it's hard to predict the market. There's no a pure logic to the stock market, so you have to be careful with that. And just because you see people buying it doesn't mean that the company is doing really well. There's other information that we need to find. But if you guys like this type of information and you like this the type of topics, I suggest you to subscribe. Also, if you feel like somebody else might benefit from this type of information, I suggest you to share it with them, as it might help them. Like the video, it'll help me a lot if you like the video. I've been in accounting for the past 10 years. I also run a small business on the side of reselling hype items like Supreme, Nikes, and baseball cards and all that. So I just run a resale business on the side where I talk about taxes, I talk about investments, and I talk about to find new ways of making money. So always remember, guys, to keep it simple.